Hello everyone, thanks for tuning into our latest investment video. Possibly the most underinvested sector within investment portfolios currently, European equities have benefited in recent weeks from the COVID vaccine rally. However, is this sustainable? Should investors be looking towards Europe for 2021? Who better to ask than the latest fund manager to join the ranks of Downing, Mike Clements, manager of the newly launched Downing European Unconstrained Income Fund. But before we start, if you are new to the channel, it would be fantastic if you could show your appreciation by hitting the subscribe button. And if you enjoy the content, leave a like and perhaps even a comment, but make it a nice one, please. Anyway, back to business. Mike, great to see you. Thanks for your time today. And first off, why should investors consider European equities, and in particular, those investors who are looking to generate an income?
So thank you very much for having me. So I think the starting point is the obvious one, which is the need for income is ever increasing. The UK population is getting older. This is happening at exactly the point in time where the income you can get out of things like the bond market and the savings market is never been lower. And you've seen the Bank of England in the last month or so even considering going to negative interest rates, which is similar to many places in the rest of Europe. So you've got this sort of dilemma of a rising need for income, but at exactly the moment when there is no income. And of course, everyone's chasing yield, and I'm sure you and your viewers are struggling with the same sort of issues. So the point is, where can you get a yield from? And of course, people have traditionally turned to UK equity income. And that's great. It's a good market for that. The problem is that over the last decade, you've seen yields compress, not just only in UK equity incomes, but in all equities, simply because the market's been rising. But that's been sort of exacerbated, I think, because you've seen this sort of structural trend in the market of more money chasing essentially the same parts of the market, i.e. large caps. And that's due to things like the pacification of our industry, the way that ESG and the topic of ESG is sort of increasing in importance, and people are sort of putting money into ESG investments, often large cap investments, but also things like the liquidity dilemmas of the last 18 months, 2 years, have driven a lot of investors up the market cap spectrum into the same well-liked, well-owned large cap names. And that's fine, but it's led to a sort of compression of yield. So what investors are finding is that not only is the income compressing, but it's becoming a much more crowded space, and the concentration they're getting in their income sources has sort of narrowed as well. I saw some stats the other day that something like 70% of the money that is invested in the UK equity income space is invested into the same 20 largest dividend-paying stocks. And the problem with that, of course, is that a lot of these are in sort of sectors like banks and energy and utilities and telecoms. And certainly in 2020, these being parts of the market which have suffered during COVID. And so you've seen the average fund sort of having an income cut of somewhere around 40%, and in some cases even more, up to 60%. So the problem is that just when you need income, it's sort of disappeared. And that's the struggle that a lot of investors in the UK are facing. So the question is really, what can you do about it? And I think there's two obvious things you can do about it. And essentially comes down to diversifying your income sources away. And you can either diversify your income sources away from the UK into other geographies. And I think this is really where, to your point, where European income comes into play. And we'll talk a bit about why we think Europe is actually an attractive place for income. But then the other thing you can do, of course, is you can move out of the large caps, down the market cap spectrum into sort of the small and mid cap market. And this is essentially what our fund is trying to offer to clients. We're an all cap fund, and we're trying to offer the ability to tap into not only European income, but also to the small and mid cap space, which can help you diversify your income sources.
Yeah. What do you see as the main headwinds to the region? I'm assuming Brexit will be one of those. And how have you positioned the portfolio from the outset?
So we got the portfolio. So you're absolutely right. So the sort of headwinds, if you asked me a couple of weeks ago, what the headwinds would have been, things like COVID second wave and the US election. But as we've seen in the last few weeks, we've seen both of those factors ameliorating, and the market's moved up sort of 15 or so % on the back of it. So I think going forward, the sort of headwinds to the European economy is probably Brexit and politics more generally, and how, as we roll into 2021, just quite how quickly the European economy can sort of bounce back economically. And I think it's probably going to be a bit slower than people expect, with notwithstanding the vaccines. I think the more general sort of pushback I get on Europe structurally, and a lot of investors have been underweight Europe for quite some time, certainly compared to the UK and say the US, is that essentially Europe has been seen as essentially an old economy type exposure, rightly or wrongly. And that might have been true sort of 15 years ago, where people would have been thinking about sort of sectors like the banking sector or the auto sector. But actually today, if you look at the European market, actually it's a lot more interesting than that. And I think people haven't really appreciated that. So about 65% of the market today is actually in areas which is structurally more interesting. Things like more dynamic healthcare, some of the sort of more interesting industrials. We've got quite a strong technology sector. So, for example, today semiconductors is bigger in terms of market cap than autos, and the banking sector is half of what it used to be. So, actually, today I think the pushback on Europe generally is that it's not a particularly dynamic economy, and I think that's not really true anymore. It's actually more dynamic, people think, and actually more attractive than people think. And I think from an income point of view, and I think this is where a lot of DFMs could maybe sort of diversify their portfolios to their benefit, is it's a really good place to get income out of. So in 2019, there was about 190 billion pounds worth of dividends from European companies. And to put it into some sort of context, that's about 2.5 times the amount of dividends that you got out of the UK market. And what I find fascinating is that the UK equity income sector is obviously a very well-known asset class, very well developed. There's about 50 billion pounds worth of funds. But if you look at the same sort of stats for Europe, there's only about 4 billion of assets chasing those 180 billion of dividends. There's only about 15 real European income funds. And so I think this is, and most of those are large cap for focus for obvious reasons. So I think I think the question is not really about where the European economy is going to go, because that's honestly unpredictable given COVID and the economy. I think it's probably going to go up for what it's worth, simply because I think the amount of fiscal stimulus and amount of monetary stimulus that's out there is going to remain as people become more relaxed about COVID and the economy gets moving again. Having said that, the stock market's moved up and is pricing quite a lot of that. You just look at what's happened to the airlines in the last 2 weeks. Yeah. We own Ryanair in our portfolio, and that's gone up very sharply on the back of the vaccine announcement. So a lot of this optimism is already priced in. But I think going into next year, the story would be one of economic recovery against potential delays to that recovery, and the battle between those two things will sort of determine the direction of the stock market. But beyond that, I think actually Europe as an asset class is probably overlooked by many UK DFMs, and certainly to diversify to their portfolios, I think it's worth a look.
Yeah, you've touched on the multi-cap approach that you have with regards to the fund, and I would have thought that is somewhat of a differentiator. Is there anything else with regards to the approach of how you manage the portfolio that sets you apart from your competitors?
So we essentially we go fishing, I think, in different alpha sources or different pools of ideas to other funds, and we're not better or worse. We're just different. And the two sort of areas we go looking for ideas are essentially in what we call contrarian ideas. These are essentially good companies, but ones which are out of favor right now for whatever reason. So Ryanair, which I mentioned, love it, hate it. Everyone has a strong opinion on Ryanair. You can't deny actually that over the next 5 years, it's probably the structural winner in the airline industry. Probably going to take market share away from the legacy flag carriers like British Airways or Lufthansa. And yet it was highly out of favor for obvious reasons. Of course, no one's getting on a plane. So to put it into context, in 2019, Ryanair had about 150 million passengers, and I think this year it's going to be around well under half that. So of course the stock fell out of favor, and that's what we call a classic contrarian idea, something which if you have a genuine long-term view, you can take advantage, not of an informational advantage, because of course everyone knows Ryanair, but you can take advantage of behavioral patterns and some short-term thinking to hopefully generate some returns for investors. So that's the first thing. And then the second thing we do, which I think is talking to the fact that we're all cap, and so we have the ability to go down to the smaller mid-cap part of the market, is you can just go and find stocks which no one's ever heard of, or stocks which are not that well known. And this is especially true in Europe, where there's lots of countries, you've got lots of sort of political dynamics, you've got lots of cultural dynamics, you've got different regulatory schemes in many markets. It's a much more complex market. And as a result, there's quite a lot of stocks in Europe which are just simply overlooked by everyone outside of that country. And so often what you'll find in our portfolio is stocks which are harder to research. And we do a lot of very detailed research, anywhere between 4 to 8 weeks worth of work on a single idea. And as a result, we can put those stocks into our portfolio and generate a good income and a good total return for our clients, but in a way that's maybe complements what other people are doing in their portfolios.
Yeah.
You know, a good example of that right now is we've got a company called Banca Manufacturing, an Italian bank, or it sounds like a bank, but essentially it buys the receivables from Italian, people selling pharmaceutical products to the Italian medical system. So you're owed money essentially by the Italian government. It's very low risk. You're going to get paid. But this stock's highly out of favor simply because the market's out of favor, and people are very nervous about collecting their receivables. And actually, if you look at the shareholder list, it's not really well owned outside of Italy. We've owned it for quite some time. And today you can buy the company on a P of 8, and actually uniquely the dividend yield is actually higher than the PE. The dividend yield's 9%. So we think this is a very interesting income idea, which you won't typically find in many people's portfolios. And that's the second sort of thing we do. And those two things together combined, either buying very well-known companies, but at times when other investors are scared about it, plus having the ability to buy what we call off-the-radar stocks, sort of combines into a portfolio which tends to look very different to other people's. We have, and so what we aim to do is really just to sit alongside your UK equity income fund or your European exposure, and or your ETF or whatever it is, and just give you sort of diversification of your income sources and your return sources.
I think to be perfectly honest, and to round this up, that's absolutely key. You know, I've looking through income options for investors. It is all about diversification. It's not about relying upon one stream or the other. It is about meaningfully looking at different opportunities and finding out where you can build up that sustainable income from, knowing that there will be certain areas that become out of favor and some areas that will become, the flavor of the week. I completely get what you're saying, and I completely agree. Mike, it's been an absolute pleasure to speak to you. Thank you very much for your time. I'm sure we'll catch up soon. You take care, and if I don't see you before Christmas, have a good Christmas. First time I've said that this year.
Thank you, Andrew, and thanks for your time.